Hey everyone, welcome to the channel. This is Elias from Crypto Gains, the best channel on YouTube to find all the information you need about cryptocurrencies and about the markets. In today's video, we're going to be talking about ADA Cardano. But before we get into the video, if you're new here, make sure to subscribe to the channel, like the video, and comment down below, tell us what you think. And also, don't forget to join our free Telegram channel. The link will be down in the description. We post free calls, free signals. We're a huge active community and we all help each other out. So don't miss out on the opportunity and join now. But now let's get into the video. So first of all, what is ADA and what is Cardano? It's important to differentiate between the two. ADA is the cryptocurrency that lives and operates on the Cardano blockchain. The Cardano blockchain was founded by the ex-co-founder of Ethereum, Charles Hoskinson, and it was officially launched in September 2017. And even though it joined the list of cryptocurrencies later than other cryptocurrencies such as Ethereum and Bitcoin, it is quickly rising to become one of the top cryptocurrencies. Now, if we go over to coinmarketcap.com and have a look at Cardano or ADA, we can notice that it's the fifth cryptocurrency in terms of market cap, with a market cap of $41 billion, which is huge. Now, it first got everyone's attention back in 2017 because of a very exciting and ambitious project. But that's not only the only reason why it caught everyone's attention. If you look here at the charts, it surged from around 2 cents in late 2017 to about $1.3 in early 2018. Now this surge clearly was not sustainable and it quickly dropped back to around below 1 cent, and it sat comfortably at this level for a long period of time before it started rising back again in early 2021, before reaching its all-time high of around $2.46. Now the Cardano blockchain is used to transfer ADA from one user to another, but it's also used to host applications and smart contracts, which might seem similar to Ethereum. On the surface, they might look similar, but in reality, they are quite different because Cardano aims to solve some of the main problems that Ethereum and many other blockchains face, such as speed, sustainability, and high power usage. Now, the main difference between Cardano and other blockchains is that Bitcoin and Ethereum, for example, use a proof of work model, while Cardano uses a proof of stake model. Now, to clearly understand what these two terms mean, we can go to Investopedia, who summarize it much better than I do, and read here the key takeaways of the explanation. We can see that proof of work is a decentralized consensus mechanism that requires members of a network to expend effort solving an arbitrary mathematical puzzle to prevent anybody from gaming the system. So basically, miners on the system will solve the transactions and validate them to make sure that there is no fraud in the transactions. Proof of work is used widely in cryptocurrency mining for validating transactions, as I said. Due to proof of work, Bitcoin and other cryptocurrency transactions can be processed peer-to-peer in a secure manner without the need for a trusted third party. Proof of work at scale requires huge amounts of energy, which only increases as more miners join the network. Now, proof of stake solves this problem, and it's used as an alternative to proof of work. Now, to understand proof of stake, we remain on Investopedia. With proof of stake, cryptocurrency miners can mine or validate block transactions based on the amount of coins a miner holds. Proof of stake was created as an alternative to proof of work, which is the original consensus algorithm in blockchain technology used to confirm transactions and add new blocks to the chain. Proof of work requires huge amounts of energy, with miners needing to sell their coins to ultimately foot the bill. Proof of stake gives mining power based on the percentage of coins held by a miner. Proof of stake is seen as a less risky in terms of potential for miners to attack the network, as it structures compensation in a way that makes an attack less advantageous for the miner. Bitcoin, the largest cryptocurrency, runs on proof of work rather than proof of stake. So this all might seem a little bit confusing, but you can look at it this way. Proof of work is as if you're an employee in a firm and all you care about is just doing your hours and getting paid at the end of the month. You don't really care about the outcome and how well the firm is doing. Here's the difference. Proof of stake is where you actually hold a stake in the firm, so you become a stakeholder. That's why you care more about the well-being of the firm. And that's why the proof of stake system is more advantageous than the proof of work system. Now, Cardano also has the potential to handle up to 1 million transactions per second, which is much faster than any other blockchain out there. Currently, they handle up to 6.5 transactions per second, but that's due to the low demand on transactions. And even though they haven't reached their ultimate power yet, they have a huge advantage for the future. Also, Cardano or ADA has a limited amount of supply that will ever be created, which is currently 45 billion coins, with 32 billion coins currently circulating in the market. And I really like the idea of a limited supply because it gives more value to the coin. So Cardano also planned to create what they call the Internet of Blockchains, where they connect different cryptocurrencies and blockchains and allow you to move assets from one cryptocurrency to another without an intermediary. Also, the Cardano blockchain operates on two separate layers. The Cardano settlement layer that acts as the balance ledger and handles the transfer of ADA coins from one account to another, and the Cardano computation layer that contains all the info about the transactions and why the transactions are made, and this is the layer that runs smart contracts. So these two layers allow the assets to be moved from one account to another without having the information about the smart contracts being moved with them. And the users of the computation layer can filter transactions based on certain parameters they set. So now that we know everything about ADA and how it works, let's get to the technical analysis and the daily charts for the price prediction. So if we go on Binance and look at ADA's daily chart, we can see it has formed a falling wedge pattern. If the pattern has been confirmed, we can estimate a target of $2.15, or if you want to be more precise, $2.153. We can measure this by getting the height of the bottom of this triangle to the top of it and then replicating it on the breakout point, which allows us to predict the possible target with the help of the Fibonacci levels. It is currently retesting the breakout point and falling above the 200 exponential moving average. Thus, ADA is still considered to be in an uptrend. If ADA fails to hold the 1.2 levels, it might retest the weekly lows near 1 as shown in the rectangle. And guys, remember that nothing that we say in this video should be taken as financial advice. We're not financial advisors. We're here to give you information and to give you our own opinions. So before you invest in anything, make sure to do your own research. So today we looked into Cardano's plan and how it operates. We also looked at the charts and the price prediction. But the question is, can Cardano really succeed? And is it the future of cryptocurrencies? Like any other network, Cardano has many pros and cons. We gathered some of them here for you. Cardano is more scalable than Ethereum and more decentralized since it scales through sidechains. Ethereum, on the other hand, has more adoption and more partnerships than Cardano. Cardano also does not have a white paper and instead goes through many rounds of research and testing before any updates are implemented to the blockchain. This ensures that any errors or any glitches are fixed before going live. Cardano does not have a white paper and instead goes through many rounds of research and testing before updates are implemented. This ensures the blockchain network, which is more eco-friendly, addresses any issues before going live. And the platform recently underwent many upgrades in order to support multi-asset currencies and allowing the creation of NFTs. Compared to Ethereum, which has an unlimited supply, Cardano does have a limited supply, which makes it more valuable and makes it one step ahead of Ethereum, who are just planning the release of Ethereum 2.0 that has just been delayed. It also outperformed Ethereum and Bitcoin in the crash, making it safer for crash averaging. The big news is that Cardano saw huge inflows of money when Bitcoin and Ethereum saw large outflows in late May. Notably, Cardano gained on both coins and retained its lead ever since. In July of 2020, for example, they partnered with the Swiss fintech company Like to allow the use of blockchain applications on their network. In late January of 2021, Grayscale opened a Cardano trust so that people on Wall Street could get access to Cardano even in their retirement accounts. On April 29th of 2021, Cardano partnered with COTI, which will function as a payment processor. Cardano also plans on implementing cross-chain integration. Cardano aims to integrate with other major cryptocurrencies without the use of a third party, which will reduce the fees and exchange charge, allow quicker and easier transactions across the blockchain, and remove the risk of a third party losing your currencies. So that was it for today's video, guys. Thank you for watching. If you enjoyed, make sure to drop a like and comment down below. Tell us what you think and tell us, are you planning to invest into Cardano in the future? Also, if you're new here, make sure you subscribe to the channel. Don't miss out on the new content coming very soon. And don't forget, join our Telegram group. The links for all our socials will be down in the description. I'll be seeing you very soon, but for now, as always, let the gains be with you.